All right, welcome back. My name is Danny, and if you don't know who I am, I've bought over 50 rental properties. I've made six figures on flips, but I've also lost money on others. I currently own 26 long-term rentals, and we manage over 350 units in my property management company. These are going to be the 13 most brutal, unfiltered lessons that nobody taught me, but that you need to know before you go out there and try to build your own rental portfolio. So if you're looking for fluff, if you're looking for just guru hype, click away. This is real. This is truth. Let's dive in. So lesson one, cheap properties are usually the most expensive. That $25,000 deal in the hood is going to end up costing you your peace of mind and your bank account. So between damages and evictions and just the inability to get contractors to go out there and work, it's just not worth it. I now buy based off of tenant quality and long-term appreciation, not the original sticker price. There are many other factors that go into a potential cash flow of a deal. It's not just purchase price and rent. Like, what's the age of the building? What's the location? Do not go cheap. Buy in B and C areas. For me, that's been the sweet spot for long-term rentals. Lesson two, contractors can kill your cash flow. Unfortunately, I've had quite a few experiences with bad contractors that have ghosted me or that have started the projects and then walked off. It will blow up your budget and cost you a lot of money. Always pay in milestones. Be sure to have a clear scope of work on the front end, and then never pay up front, and always verify the work with an unbiased party, not just someone that they're sending or even themselves. You want to have someone unbiased go out there and walk that property to verify that the work is being done properly. Lesson number three, vacancies are the silent killer. I once had a cash flowing unit that sat vacant for 4 months. It looked great on paper, but really ended up crushing my reserves. Like, every day that a property is not rented, properties are costing you sometimes hundreds of dollars a day between the interest and the taxes, the insurance, the repairs, all of that. And that really begins to add up if you have more than one unit that's vacant. You have to have a ton of urgency when it comes to filling your vacancies. Lesson number four, be sure that your property manager has systems to produce results. An unexperienced property manager will destroy your investment potential. Do they have a clear SOP, a clear process on what to do when a tenant doesn't pay? Like, how quickly are they going out there to post notice? What exactly are the messages that they're sending them? What does it look like when they have a vacancy to actually getting it to market? Like, you want to know their exact processes, because at the end of the day, you don't want to pay them to learn that. You want to make sure that someone's already done that hard work, being experienced to figure out what actually produces results, and then go out there and hire those people. Lesson number five, you will get scammed if you're not ruthless with your numbers. Like, dig into the details, verify every lease. Don't just rely on other people to give you all of that information. Like, unfortunately, one time I bought a property, and this is just me being inexperienced. The wholesaler said that there are 3 bedrooms. Come to find out that there are only 2 bedrooms. So obviously that threw off the valuation on the back end, but I still made it work. But verify everything, because you want to make sure that you know what you're getting into. Lesson number 6, you cannot fix a bad market. So even the best rehab, even the best team cannot save you from an area that is declining in rents and has zero rental demand. I operate in a smaller city, Birmingham, Alabama, but I do not buy properties outside of that city, outside of greater Birmingham. Yeah, there are a ton of small towns, and yeah, we might be able to find some good deals out there, but I know that the population is not growing, that it's been stagnant, and there's no rental growth. So what happens if I buy a property that has a tenant, they move out, and then trying to fill that vacancy, it's just going to be a nightmare. And so I want growth. I want options. I want to be able to have people that are constantly moving into the city. If the town is tiny and it's not seeing growth, like, just pass on it. Go to a city where you're going to have options, where you're going to have growth, where you're not limited to just those specific people that have always been there. Lesson number 7, save for repairs or you will end up losing the property. Investors lose their properties to foreclosure not due to a lack of equity, but rather to a lack of liquidity. You want to make sure that you're saving for those major repairs because they will happen. If you're not setting aside cash for repairs, you will run out of cash or liquidity and then be in a position where you're forced to sell. Lesson number 8, turnover is more expensive than you think. Like every time that someone moves out, you're losing 2 to 3 months of cash flow between the repairs and vacancy. Renewals are going to be gold. And so you do that by keeping your tenants happy. Don't push the rent a ton. We like to do 3 to 5% per year. Do the small repairs along the way. And if you're able to do those things, they stay in the property longer, which increases your long-term ROI. Lesson number 9, out of state works, but only with a real team. The deal is only as good as your local boots on the ground. So if you don't have a property manager or contractors or a lead person or agents, do not buy there yet. And once you do find that team, be sure to actually visit the city, spend a week in there, shake the hand of the contractor, walk the property that you're potentially buying, drive around the area. You want to know what you're getting into before you actually get into it. And also you want to know what type of people you're going to be working with prior to you actually committing to working with them. Lesson number 10, cash flow is the hook. Equity is the wealth. Most of my long-term wealth came from forcing appreciation, not the $200 per month I was chasing at the beginning. I think a lot of us come from that rich dad, poor dad mentality. And so I don't blame you for this, but in my experience, the monthly cash flow is great, but the principal pay down, so having that tenant pay down that principal every month, the market appreciation, the power of leverage, the tax benefits, those are the real benefits to it. That monthly cash flow on the back end is not the main benefit. It is a benefit, but it isn't the main benefit. The appreciation, the principal pay down, the tax benefits, all of that stuff is what too many people overlook. And that's really what the meat of real estate is. Lesson number 3, refinancing feels good in the moment until you realize you're just adding risk. So there have been a few deals where I refinanced too early or too often or too much, where the appraisal came back. I knew at the time it came back high on the back end, and then I over leveraged it just because the appraisal came back high. And so be okay with leaving some equity in the property. You want to stay around that 70% LTV. You want to make sure that you're refinancing with fixed debt, never variable, and always pay a little bit more for that 30-year fix. It provides a peace of mind long-term. Lesson number 12, most problems start with a bad purchase, a bad buy. So if you bought wrong, you cannot market your way out of it. You cannot fix your way out of it. The best operators are disciplined before buying the deal, not after. And so even if that means that you have to pass on hundreds of deals before you find the right one, do it. It's better to pass on it than to actually commit to it, jump into it, and then lose money in it. Lesson 13, real estate will not save you from your poor leadership. You could have a great market. You could have a great deal, but you will still lose if you don't lead yourself and you don't lead your team. And so leadership is the multiplier across this industry. Even though you might not see your property manager or your agent or your contractor as your team, they are all working towards the same goal as you. And so be sure to help them and they'll help you. And also lead yourself, grow yourself, learn more by yourself so that you can have a better vision, a better outcome down the road. These 13 lessons cost me years and thousands of dollars to learn. If you got any value from this, be sure to subscribe below, but more importantly, be sure to implement one of these today. And if you are a serious investor looking to scale your real estate portfolio, I'll help you do it the right way. We find deals, we manage the rehabs, and then we help on the back end with the sale or with the property management side. Click the link below in the description and let's be sure to connect. And I hope you all go out there and crush it. Go out there and chase your dreams. Have a good one.